Hi everyone. If you're interested in learning how to trade indices, if you're interested in learning how to trade Forex markets, then you need a good, solid understanding of technical analysis. And so in this video, I'm going to talk you through a couple of hours of trading on the DAX, which is the German stock exchange. And in this video, I'm going to explain quite a few elements of technical analysis just to help you start thinking along the right lines to take your trading into profitable, or to help you improve your profitability in trading indices and Forex. So this is the 30-minute chart on the DAX, and I'm going to talk in this video about candlesticks. You can see I've got candlestick patterns on the chart here in front of us. I'm going to talk about support and resistance. I'm going to talk about support and resistance zones. We're going to be using the couple of moving averages. You can see on the chart here we've got the red 20 exponential moving average and the blue 8 exponential moving average, and also the MACD line. So this is the MACD indicator at the bottom here, and you can see that we've just got one line on it, which is the MACD line. So how to use that to help you with your trading. And so what we're looking for in trading is we're looking for turning points. We're looking for turning points, and we're looking for trend continuation patterns. They're the two main things that you're looking for in trading. So momentum and mean reversion. And you can see in this chart here, this is yesterday's chart. You can see in the grayed out box here, you can see that this is the open here at 8 o'clock. This is the close at 4:30 on this particular market. That's UK time. And so you can see here, this is a momentum move higher, pullback, failed to make the previous highs here, and the market came down. So you've got momentum higher, you've got a block of price action here, and this was a trend continuation as the market pulled back and then continued in its trend. Market pulled back, went higher and failed to make the previous highs, and the market came down and it closed down here. So how do we, when we're coming into the open today, and this is the 30-minute chart that takes us right up to the 7:30 price action this morning, how do we use the information in front of us to build a picture as to what could possibly provide us with trading levels to play with in today's market? Well, let's just first of all have a look at what happened yesterday. So the market opened here and it came down to these lows here. So that was a failure as the market came down, spike. There's a big spike on that candlestick bar. It was a failure to break the overnight lows here, and the market then came up. You can see that the market's formed a very small level here, very small range here in overnight trading. The market broke out of that range and powered on upwards. So first of all, we've got a level here which is the low of the day yesterday. So that's the low of the day yesterday at this level here. You've got yesterday's open, which is here. You've got yesterday's close, which is here, and yesterday's high, which is here. These are all important price levels, okay? So just again, you've got yesterday's low, yesterday's open, yesterday's close, and yesterday's high. And the market was in a trading range, as you can see yesterday. Big trend upwards, and then big trend downwards, and it actually closed within a few points of where it opened. So that indicates that there was a trading range throughout the day. And overnight, since yesterday, you can see that the market has failed to break the lows of yesterday, and it's just basically been going up to around about the middle of yesterday's range. Okay, so the price at which I've paused here is an interesting level, and so based on yesterday's trading, what were the important continuation levels and what were the reversal levels? Well, obviously we've got the reversal level at the top, but there's also some stuff in the middle here that we could potentially play with as well. So these highs here, simultaneous highs, actually provoked a pullback here and then trend continuation forward from there, and the market also reversed at this level here. You can see that I'm, rather than using the spikes, I'm using the closes, the low close here, the high closes here. And these, I find these are, the closes are probably more important than the end of the spikes themselves when you're looking at support and resistance levels and support and resistance zones. So let's just get rid of the grayed out box here. And so we've got in here, you can see we've got a couple of zones. So we've got a zone here. Let's just take that right through. We've got a zone at the top. Take that right through. And we've also got a larger zone at the bottom, which was created by the open and the low yesterday. So in one way or another, these zones are going to play an important role. You'd expect them to play an important role in today's trading. And so what we're going to be doing initially is we're going to be looking at what happens if prices come down to this zone here, what happens? If prices come up to this zone here, what happens? And if prices reach the top here, then we'll be looking for potential reversals at this stage here. So that's basically using the 30-minute chart based on price action yesterday. We've got a template which provides us for context with perhaps some possible trades in the price action this morning. As the market's going to be opening down here, obviously these levels here probably won't play a part in the price action early on, but they may play a part in the price action later on in the day. Okay, so that's the first thing that I would do in the morning, and then I'd move down from the 30-minute chart and have a look at the 5-minute chart and say, okay, based on the 5-minute chart, and this is coming right up to the 755 bar here, candlestick bar here on the right of the chart. So based on what I've already put on the chart, what can we see happening? Well, you can see that what's actually happened here is that the market has overnight, and this is going back to midnight through to 8 o'clock in the morning, of course, the market has formed some lows here. And so the low close was this level here, and you can see I've put a support level black line in there. And the highs have been here, but the close highs, high close was this level here, and I've got a black support and resistance line on that level as well. Okay, and you can see that the overnight highs coming up to 7 o'clock were tested here, market rejected down, tested here, market rejected down. Okay, so a couple of different things. We've got a zone up here, we've got a zone down here, and potentially we could extend this zone down a little bit to incorporate the overnight highs. Anyway, somewhere in this level here, we'd be looking for, does the market reverse? Some level within this area here, we'd be looking for what happens, does the market reverse? Okay, so let's have a look at what actually happened. So you can see our levels drawn in on the chart, and this was the 8 o'clock open here. And so the market came up, nearly made the turning point zone from yesterday, actually did make the overnight highs and then started rejecting down. And so you can see that basically the price is oscillating between these two levels here. So we'll move forward and say what happens next. And so the market broke out from these levels and started going down. And we're now entering our little zone at the bottom here. We're entering our zone and we're saying, okay, what's this telling us? What's the price action telling us to say, I'm going to reverse? You can see that there's been a bounce. However, this was a big breakout bar, big bar going down, big bar going down to the lows, coming down to the lows of yesterday. And this had a low close here, and then the next push down failed, but it did actually produce a lower close. And when this happens, this is the 1 minute chart, so very tiny detail here, but this low was closed below this low here, which indicates to me in this situation you've had a good run down. The bears are going to wait for a pullback and they're going to try and push prices even further down. So let's have a look and see what happened. So the market made it up to the 20 exponential moving average. You can see a squeeze in here between the 8 and the 20 exponential moving average, and then the market starts coming down again and breaks out into our zone at the bottom. And so what can we see here? Well, we can see that based on this, there's been a big breakout bar, of course, and in terms of the MACD line, this was a low here with these prices. This is the low here with this bar pushed down here. So we've got a potential divergence on the cards here. Okay, so you can see the difference here. You got this close and then a lower close, and on this occasion you get this close and a higher close. So if the market starts rejecting upwards, which is what it did, then you've got a divergence on the MACD indicator. You've got a lower low, higher low, and it diverges with price where you get a higher low and a lower low. So the averages are diverging with price, which is a fair indication that lower prices are unlikely. And it's also rejected within our zone here, within the zone that we placed on the chart, and so we've got to be on the lookout at this stage for, does the market reverse? And so, okay, you could say the market's going to reverse because there's a higher close here and the market's pushing up, but that's, for me, that's not quite good enough. I like to see more evidence than that. If you've watched my videos in the past, you'll note that I like to be able to place little blocks around congestion areas, and when we get a breakout of the congestion area, in this case you've got a breakout lower, then I take trades based on the breakout of the little zones that form, the little blocks that form on the charts as prices progress. So the market comes down, and it stops. You can see it's being pushed up from the 8 exponential moving average. It's never closed below the 8 exponential moving average. The market comes down, tries to make a low. You can see this red bear bar just about on the chart here, and the market's pushing up. As soon as the market went above the high of this bear bar here, I took my entry from that, and I can see it rejecting higher. You've had a low, higher low, higher low on the bear bars, on the red bars, and that was good enough for me to take my trade long. And maybe a little bit premature on this one because you can see that there are highs here, but with the divergence as well, the signal was good enough for me, and you can see that the trade worked out nicely. So we're approaching here these highs, good place to exit. Market's broken out above the 12,800 level as well. This is a round number level, so nice exit for your trade here. So on this particular trade, we had an entry above here, and I had my protective stop just below this support level here, down here. So you've got, that's your risk from your entry to your protective stop, and you can see 2 to 1, 3 to 1 risk to reward easily achievable on this particular trade. So that was the first trade that I took, and you can see that the market did actually go slightly higher, broke these highs, That might seem insignificant, but it isn't insignificant, because when markets break out, they tend to go above any resistance levels, above previous highs, and then loop back down before bouncing upwards. So we've got a 3-bar reversal here. Wait for evidence. You can almost put a trend line across these bars here and wait and see if the market breaks through that level, which it does there. Market still looks as though it's going down, so we wait for more evidence. And at this stage you can alter the trend line. So you've got that as your trend line, and you can see that the market has approached the 12,800 level and then it's rejecting upwards. Okay, so you then wait and see, what happens next. Is the market, you've got these highs here, you've got a high here, low here, low here, so you've got, basically it's forming a little trading range here. You've got a lower low, higher low, high, higher high. So you've got a higher high, higher low, which is good in terms of looking for trend continuation upwards, and then a trading range. So you've got a lower high, this high is higher than this high, lower high, and a higher low. So trading range. And so we wait and see what happens. And market pushes on upwards. And pushes on upwards, and now this is important because the market's now approaching these highs here. These were the overnight highs, and so this is an important level. You can see that we've got a cup here being formed and a handle here. So I'm looking for evidence that the market's going to go up at this stage. It's consolidating above these highs, above that high, that high, that high. It's consolidating above these levels, and I need evidence that it's going up. And one of the pieces of evidence that I look for is when it closes on a bear bar above the 8 exponential moving average and then breaks above the bear bar that closed above the moving average, then I often take that signal. So you can start to see that there's a block of price action forming at the top here. You can place that box in around about there, and we'll be looking for breakouts higher from that particular level. Why higher? Because you can see the market's pushing up against this level. It's failed 1, 2, 3, potentially 4 times, didn't quite make that level there. It's formed this cup and handle. Perfect technical breakout pattern that you've got there. And so the market is continuing to form the handle, and then you might not be able to see it that well, but there's a little doji bar in there which is good enough as a bear bar to say, okay, the market's tried to push down below the 8 exponential moving average and it's closed above it. And so any bar that then breaks this box here, breaks these highs here, is likely to be a breakout bar that will take us higher. So I'm entering on the next bar just above here. So my entry's up here. For this particular trade, my stop is below these little lows here. And again, I'm looking for, as always, I'm looking for 2 to 1 risk to reward on these block break trades. And you can see that we got it at this level here, and funnily enough, this is the, well, not funnily enough because there's no coincidence here, this is the 12,850 round number level just there, and so that's a good exit point for this particular trade. So the market pulls back. Where does it pull back to? Well, it pulls back to this consolidation breakout level here. Price very often when it's trending, it goes up, pulls back to a consolidation level just above these highs here in this case. In this case, pulls back to pause just above this level here. And so again, you're looking for a close above the 8 exponential moving average, a pullback to the 8 exponential moving average that closes above it, which is there. That's the bear bar with a close above the 8 exponential moving average. And so potential breakout from the highs here. And so this was at 12,836 level, and you've got to be concerned about the round number at 12,850. So quite a close stop on this required on this particular trade. And just fast forward here, you can see that we made it to the 12,850 level just before the market started pulling back. So another good trade there. So I hope you found that useful. That's how to use support and resistance levels from the previous day's trading based on the 30-minute chart, and also the pre-market action based on the 5-minute chart. So we're establishing where are the highs, where are the lows, where is the market currently in terms of, is it ranging, is it trending? And in this case it was ranging. And so when the market reaches the lows of the range, which was down here, then we're looking for, does it produce the chart patterns? Does it produce the indicators? Does it produce the confluence within the indicators here? You got your divergence, and you got a nice block of price action with a breakout higher from it. And so the market's at the bottom of the range here. You buy low and you sell high in trading ranges. So one reversal trade here, one trend continuation trade there, and another trend continuation trade from here. And we're looking at the same sort of price action in order to take trade entries, to place stops, and to take profits from these particular trades. So that's how to use multiple time frame analysis, support and resistance zones, and read candlesticks. And you need to have each one of these particular skills in your trading arsenal, in your little trading toolbox, in order to trade effectively. If you're interested in learning technical analysis, then that's my speciality. I read price bars bar by bar, and I read charts. And I'd be delighted to teach you how to trade. We've got a couple of online trading courses, a day trading course and a Forex trading course, in which I explain all of these aspects, the candlesticks, the zones, the support and resistance levels, how to draw trend lines and how to manage your trades, the trade entries, the trade exits, protective stops and targets. I explain all of that and give you the techniques and the systems that I use successfully on the DAX and in the Forex markets every day. So if you're interested in learning how to trade, I'd be delighted to teach you. My name's Anthony Beardsall. Thanks ever so much for watching, and I'll see you on the next video. Bye for now.